Great. Always good to have other people doing your job. So thank you very much. So just to answer a very well-spotted question on one of the true key differentiators with this senior copper development, we don't just sit in the largest copper producing country in the world, a tier 1 jurisdiction, top 3 mining country, but to sit at low altitude, below 1,000 metres on the coast with a circa 1 billion tonne play means that nearly every one of our peers is sitting at 3,000 metres or higher, and really what we're actually talking about is most of the leading plays are sitting at around 4,300 metres, and what that means is for a coastal developer, we don't have 500, 600, 700 million US dollar water pipelines to build. We have a 70 million US water pipeline to build. We also got lucky on the metallurgy, and salt water is able to be used in our processing rather than fresh water, which if you're in Chile or in most parts of the world now, require large desalination water plants, which are again items when you're talking about this scale of production of 500, 600 million US to build. And so when you take those two items away, what you're left with is a very, very favourable starting position on capital. And that's why this project is around half the price it would be if it was sitting up in the Andes where all the rest of the senior copper developer plays are located. So with that in mind, we'll jump into the presentation. I'd like to focus now on the resource build and the components of those resources. Costa Fuego is a copper super hub, we call it, because we were very, very lucky to be in a position where we could use one of the oldest strategies in the mining business, which is a 1 + 1 = 3 equation. So moving through some of the restructure of the company that was setting Hot Chili up for its North American listing and its new future, now that we've had a game-changing moment with the addition of a major coastal copper porphyry discovery in Cordillera, and moving past some of the information around our very well-esteemed new appointment in Nikki Adshead-Bell to our chairman's role, we can now look at what we're trying to build here. And this is where we're located, as I've said, Chile. We're studying at pre-feasibility level now a central processing approach, combining 2 large-scale assets together as well as some high-grade satellites that we'll talk about, into a project that's going to be around 20 to 30-year mine life, currently sitting at around 23 years with our internal reserves work going on, to build around a project that will produce around 100,000 tonnes of copper production annually, as well as 70 to 80,000 ounces of gold. And in layman's speak, that's a project that puts out a revenue base on long-term price assumptions of around US $1 billion annually. So around a $1.3 billion project to build is our current estimates, putting out revenues of around $1 billion US a year for 20 to 30 years. So that is the class of project that we're in. Really the next step up from here is whether Hot Chili is holding a project at this scale, or whether Hot Chili is holding a project that with further consolidation or exploration success steps us up to the very top end of new supply production scale at around 150,000 tonnes per annum. Then we are truly dealing with a tier 1 producer to emerge from the junior ranks. Our resource, which we just upgraded at the end of Q1 on time and within guidance, has lifted us to around 3.4 million tonnes of contained fine copper and 3 million ounces of gold. Put that into also some layman's speak, if this was a gold deposit, you'd be sitting looking at around a 20 million ounce ore body at circa 1.2 grams per tonne gold. You could also look at that another way and say we are currently holding a very upper tier 2 asset that is about to tip towards a tier 1 asset in terms of metal classification, and all of that sitting within a 10-kilometre development distance from each of the deposits. So when we look at the key metrics that make quality, grade is something you always start with. So out of where we are in the copper development pipeline. We're at the large scale end, amongst the top 20 largest undeveloped projects that the majors do not control. We're actually 6th best in grade in field. These are large open pits that will be developed. Strip ratio sub 2 to 1, pushing towards 1.5 to 1 with some of our work streams if they're successful in the pre-feasibility. As I've said, metallurgy has always been a standout. We got about 2% better recoveries using saltwater processing in our metallurgy streams at pre-feasibility level. And one of the very interesting aspects of what we have is that these two coastal large deposits have no arsenic in them. That's also a very unique feature in the copper supply business, because a lot of these new developments do have arsenic, and it means that concentrates produced out of projects like this on sulfide processing are commanding premiums on that product of anywhere between $80 to $160 a tonne on a tonne of concentrate. As I said before, infrastructure has always been key to our advantages and our low capital hurdle. We sit within 50 kilometres of an existing port that was built for third-party use and unfortunately has not been used a lot since it was built. So we're in the process of negotiating an arrangement to lock that port into the entire development. In terms of permitting, what a decade of work will do and what persistence and never giving up will do is it will put all of the infrastructure pathway from mine to loading it on a ship in place, and that's the advantage that we have. That means that this senior development is the first in line to production. We're aiming to get this to a decision to mine and finance in about 2.5 years' time, and seeing early production in 2027. The next senior copper developer will likely be 28 or 29. So we have the easement corridors for our water pipeline to be built, purchased, owned and in place. Electrical easement corridors to the main node of the central grid substation at Maintenance CO. Very unique that the cost of those two key utilities combined is about $100 million of our capital. Surface rights controlled in the deal when we consolidated the original deposit at Productora in yellow, and now the bolt-on of Cortadera. And people would say, how are you going to get the tonnes to the mill and how much is that going to cost? Well, some innovative work by Hot Chili has looked into optimising ore handling and transport solutions to answer exactly that, and we're very pleased that we rolled out a pre-feasibility with Doppelmayr, the makers of probably the largest scale rope conveyor systems in the world that are currently operating. And what that means is that we can put a tonne of dirt from Cortadera at a processing facility where we've done all of our environmental work for many years on the original footprint for the mine development, and we can put a tonne of dirt there for 20 cents. So that allows us to basically process these ore bodies together right next to a processing facility. So we've been lifting the resource base, 930 million tonnes at about 0.5%, 82% in indicated. We really pushed hard with a big drill out last year and just completed the rest of the development study drilling for the pre-feasibility about 8 weeks ago. So we're through most of the heavy spend, which means that $22 million cash has us well funded into late 23 at our current expenditure rates on the pre-feasibility, as well as tackling our exploration upside with the drill rig. As I mentioned, the thing that makes this all special is what Cortadera brought to the table. This was a moment where a rabbit did appear out of a hat. To be holding one of only two major copper discoveries that have reported a resource since Kamoa was discovered by and reported by Robert Friedland in 2014, makes this unique. We're not finished with the growth potential on our existing assets, and indeed we'll look at some exploration upside that has never been drilled and was one of the attractors for Glencore's interest, and why they also share our belief that we potentially are sitting on something that may well be producing at 150,000 tonnes per annum of copper. So Cortadera, 30 months, very rapid drill outs, producing very large scale assets are all about quality. You don't get to fund them as a junior that rapidly and sink large drilling budgets that quickly into deposits that don't produce the goods. So we secured a deal to buy this for $32 million US when hot chili was at its darkest hour. It was a turning point for the company. Our market cap was down to $10 million Australian. We were 1 cent in the old capital structure of the company. It wasn't something that the stage at a conference I presented at when we announced the deal expected to hear, that I was going to have to pay $32 million US when I had $800,000 in the bank, and most people didn't think we'd see out the quarter. So first drilling put out a world-class drilling intercept of some 750 metres at 0.6 copper, 0.2 gold from surface, and hit a high-grade core of 200 metres running close to 1% copper and 0.5 gram gold. That did change things, and since then we've been drilling this heavily. 2 resource announced, the last one bringing this to a circa 600 million tonne resource play. So when we look at it, it's really a hit parade of drill results from a porphyry monster. These are results that you see with SolGold, Solaris, Philo, and what a lot of people didn't realise during the pandemic while Hot Chili was putting these results into the Australian market, people in North America missed this. We have 11 of the top 40 drill results of the past 2.5 years out of this discovery, which is the same strike length as SolGold's discovery in Cascabel up in Ecuador that has propelled that company to $1 billion. 3 porphyries that extend through the surface, and this is really important because we're not talking about developing block caves at 600 metres to get first ore. Cuerpo 3 is the main porphyry. It's delivered the lion's share of those world-class results, featuring 200, 300, 400 metre high-grade intersections at around 1% copper equivalent, grades of 0.6, 0.8 copper bulk, with 0.2, 0.3, 0.4 gold are pretty typical. What that meant is it gave the development strategy not just open pits to play with, but the potential to have a fairly modest size cave extend below Cuerpo 3 pit that is going to be developed. And interestingly, what that has done has given us a lot of optionality. You see, when you have multiple ore sources to feed a mill, you have the variability to design a grade profile. The start of Costa Fuego will be all about extracting the best high-grade material from the open pits for the first 10 years. And when we've taken that very good grade material, and you would typically see your head grades fall away and therefore your profitability and margins start to get skinnier. That's how a normal single-sourced operation would likely run. But in this situation, at about year 10, we can turn on a high-grade cave and give ourselves access to 50% of the feed running closer to 0.8 or 1% copper equivalent grade. And that allows us to build out a couple of decades of very strong head grades in this copper space. Looking at the footprint of Cortaderas Cuerpo 3, I mean, it's almost written straight out of a textbook. The dimensionality of this was perfect for a vertical 1 kilometre ore column that we defined of high grade within the centre of this large porphyry, one of 3 porphyries at Cortadera. So it's given us a real strength there. But if we look at where the high grade from the open pits is coming from, you don't have to look any further than what started this company, which was the original Productora discovery. 2.3 kilometre long open pit on the coast, sitting next to the Pan American Highway. The mill will be put right next to this. But what shot Hot Chili to stardom just after we floated the company in the ASX, this discovery, when copper price was good, those results never went away. We spent a couple of years reshaping this and optimising it to try and find ways to define the high grade a little bit better. Because every time this ore body, when Hot Chili allowed it to be, for instance, mined by the government during the pandemic, to keep 400 people in town with a job because there was no ore going to that local processing facility the government used. So in any of those mining periods such as that, this ore body found 1% ore loads, 1.5% ore loads that were not within an extremely well drilled out resource footprint. So we worked on that, we've lifted that, and we've lifted the high grade component. And cross sections like this in the shallow open pit are pretty typical. We have access to bulk tonnage material running 0.6 to 0.8% in large volumes for the first 10 years, sitting right next to where the plant is. So we've been working on that to optimise it, and we've also now started to bring in some of the little cherries that we've been consolidating over the years, family-run, high-grade copper mines within our orbit, and with good grade that had never been drilled. San Antonio is a local deposit that had very high-grade production, very shallow, and dipping at about 40 degrees on the side of a hill, so making it ideal for a low strip ratio, high-grade open pit satellite. We put a first resource of this put together of about 4 million tonnes or so at just over 1% copper, and these deposits will also feature into our initial production. And with that in mind, this year's drilling has continued to put out further results, which I think that you'll all agree are pretty standout in this sector. And they've been showing that these ore bodies, even where they are now, are incrementally growing in terms of their high-grade component and footprint. So our resource that we will put out at the end of the year will involve also some upgrading, because we needed to collect hydrology, geotechnical and further metallurgical information, which we've just completed. We also have exploration going on, as I mentioned, and we're currently drilling another high-grade satellite couple of kilometres to the north of San Antonio, which sits right next to Cortadera, and we've been seeing some really nice visuals, and those results will be coming into the market. So we have quite a good flow of drilling results that has been going to be hitting the market over the next 2 or 3 months. It's very rare to see, obviously, cuprite, so I thought I'd snap a picture of that, because I imagine that's probably going to result in some very interesting results coming to the company. So outside of high-grade exploration potential, which is going very well, we've spent a long time looking at the big footprints around Cortadera, which you can see there in the centre, with the yellow representing the actual porphyry resource, the red representing the molybdenum surface soil footprints that identifies these things for explorers to then put drill holes into and make great discoveries on. So we've been doing a lot of work, and Dr. Steve Darwin, probably the rock star of porphyry geology globally, the guy who has overseen the entire drill out and guided the geological team for SolGold. Batu Hijau before that, heading up Newmont's exploration division. He's been working with us, and he's been leading Hot Chili's team, so he's been a key part of how we've grown Cortadera very quickly, and also a key part of our exploration team's approach to unlocking a cluster of porphyries around this discovery. Santiago Z is a very, very interesting footprint. It's twice the size of Cortadera, and the surface molybdenum grade is about 4 times the grade that identified Cortadera. So it's never been drilled, and we've spent about $250,000 getting access into it. And we have a number of platforms that the drill rigs will be going to next. This is something we talked about this morning. This is just about where Costa Fuego has landed in terms of size, and size is everything in big copper. These are the most leveraged deposits in the development pipeline to copper price. They all have tier 2, tier 1 scale. A number of these have been sitting in the development pipeline for many, many years, owing to their own issues. You can see names like Pebble, but we won't go through names that are finding it difficult to get advanced. S&P rates them up by green or brown or red in terms of risk. And you can see that Costa Fuego is competing very well as a low-risk project, with the bar above it representing the average grade of the deposits. It's a very clever bit of work that Hot Chili brought together with its consultants at AMEC Foster Wheeler. We looked at all of these deposits very carefully and broke them out, looked at what grades they were reporting their resources at, whether it was being reported in copper or copper equivalent, exactly where the copper grade was within these polymetallic deposits, being the yellow dot, and then what the actual copper equivalent grade represented when you actually looked at recoveries and payabilities of the individual ore bodies, and you did a proper exercise of balancing out, and we found that Costa Fuego ticked some boxes in terms of where we wanted revenue production for this scale. So with 82% indicated, we're probably one of the highest in terms of confidence level on the resource, and our next step is to push that onto that plateau that represents tier 1 size in terms of our next growth horizon with our resource upgrade coming. As I mentioned also this morning, hot chili is one of those very rare beasts. We came from Australia into a space that's dominated by the North Americans. Nearly every one of those top 20 projects are North American listed companies. We recognised it, and we also recognised what Equinox did in the Australian market the last time Australia bore a copper major. And for Equinox to be valued by the Australians at $45 million before dual listing it with over 1 billion tonnes in resource at 0.7. The last time the copper price moved in the Canadian market, re-rated 4, 5, 6 times on those large-scale copper equities. The same thing has happened in this copper cycle. And Craig was able to successfully dual list that company and eventually migrate enough stock over into North America for the North Americans to then start controlling the liquidity with the stock. And that re-rate story, as I said, ended with the construction of Lumwana, 9 months of production, and then a takeover by Barrick for $7.2 billion in a relatively good copper price environment, about the same price that the copper price is at now. So hot chili is really looking to emulate that. We have the same starting point. We have one of the only blind spots of the Australian market, big copper, LATAM, and for us to now be sitting alongside and trading in the North American market, we're aiming to now establish our relationships with the capital markets up here, put a presence in North America, and continue to build this towards a North American-oriented project for project financing in 2.5 years' time, and hopefully successfully communicate the arbitrage opportunity that we represent in terms of the multiple that we are trading below our peers in Canada that control projects of similar size, mostly at lower grade, and all mostly above 4,000 metres altitude. ESG is a big focus for us this year. We're aiming to deliver our pre-feasibility with the Digby ESG wrap. Nikki Adshead's appointment has been also crucial in this, with her experience on this side of where hot chili needs to position this as a very, very responsible and sustainable and respectful project. Someone asked me just before this presentation what keeps me up at night, what do I see as a key risk? Outside of copper price, I think that this slide represents the key risk for all companies aspiring to build a mine in this world, which is becoming increasingly difficult, whether it's in Australia, Canada, Peru, Chile, Argentina, Africa. All jurisdictions are requiring a huge amount of increased focus on this by the companies. If you're looking at any investment in the resources sector and you're looking at risk, this is the area you need to look at. So companies that are not clearly controlling this, probably this is the one that's going to get them, and you've probably seen examples of that happening recently with some companies in Chile and also in Latin America. So our next catalyst, look, we've just shaved our expenditure down because of the completion of that development study drilling. So it should say 1 drill rig operating. So apologies on that minor oversight. We have the ability to turn on any of that fleet of rigs which were built as a dedicated fleet for hot chilies used by our former chairman Murray Black and second largest shareholder. And we may well decide to do that depending on the outcome of future results that we're about to start drilling. But outside of closing concentrate offtake agreements with Glencore that are quite unique, the port being tied up as probably one of the next commercial negotiations, focuses on resource upgrades that are coming at the end of the year, and a pre-feasibility study to finally get unveiled on the combined Costa Fuego project of what all of this put together will represent. We're really looking forward to kicking off our financing discussions in the early part of next year. So There'll be a number of key announcements going into that. But I think that what Hot Chili really does not communicate is our vision for what we came here for. It's great to talk about finally Hot Chili, after the last 30 months joining the senior copper developer ranks, getting some luck, making the right choice of an acquisition, a very, very ambitious acquisition given the state of the company and the state of the market at that time. And to be standing here with this asset and with the value at many multiples away from probably where it would be pegged in the North American market, we know we've got some work ahead of us to get this story out there. But what I see as a real opportunity here are the things that we don't talk about, what we're doing on consolidation. Remember, this story was built from consolidation, from 14 years of work from when I founded the company, and 12 years of Jose Ignacio Silva, our country manager and chief legal counsel, sitting up the back of the room, that has done all the work alongside of me. It's just very interesting to think that no one thinks about what Hot Chili can do next. Everyone focuses on whether another exploration discovery will come. All of the assets were built around consolidation, and I imagine that we are very, very busy and just working as hard on what will come next into this consolidated land holding. So in summary, I think there's a few points there, but I've rabbited on well enough, and we might even have 20 seconds left for a question. Excellent. Well, if there are any further questions, then our booth is just outside the presentation hall here, and I'm sure that you'll see myself and Jose around. So thank you very much, everybody.